Is trading and investing one and the same? Are they different?
Definitely, they're completely different. I say they're like two sides of a coin. You have to buy quality over quantity, but at right time, which comes during crisis.
Dear viewers, welcome to this episode of Expert Speaks. Markets correct, markets move up, sometimes bull market, sometimes bear market. For those people who watch screen every day, it's a confusing world. Should I buy? Should I sell? Should I hold? What should I do? All the time the confusion. To sort out all these issues and to give you a right guidance, I have called for this presentation an extremely eminent personality today, Chartered Accountant, Mr. Rudramurthy from Bangalore Vachana Investments. He's going to take you through what's exactly is happening in the market. Should you trade? Should you invest? What are the things which works in your favor? What is the things that you should avoid? Stay till the end of this video. It's going to be an amazing presentation of facts, history, experience by Chartered Accountant Mr. Rudramurthy. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the markets and the rules and regulation to succeed as a trader as well as an investor, we have invited to the studios today an eminent speaker, author, investor and trainer, C.A. Rudramurthy. Mr. C.A. Rudramurthy, he is the author of best-selling book on Amazon, Mind, Market and Money. He has trained over 1 lakh odd trainers in his career as a trader. He is highly educated, a chartered accountant by profession. He holds a CFT level 1 degree from IFTA, USA. He also holds 5 master degrees, MCOM, MFM, MPhil, PGDBA and PGDMM. You would have seen him multiple number of times on popular business channels like CNBC TV 18, 80 Now, TV9, Public TV and various other TV channels. He has been awarded with several awards till date. He has been awarded by Times Group in the year 2020. He has recognitions from FICCI. He has got Lifetime Achievers Award from Institute of Chartered Accountants of India, Southern India Regional Council. Welcome to this episode, Mr. Rudramurthy.
Thank you so much. It's my privilege to be here. Thank you.
You have a YouTube channel by name Rudralogy. I'm a great fan of yours.
Thank you.
Whenever I'm in doubt, I always look for suggestions you come forward. It's very difficult for people to simplify things. You are able to understand, you simplify things. When somebody is in doubt, your thoughts will give that particular clarity. I'm a practitioner of finance and we are into the business of helping people invest money. We don't trade. But many times people get confused with trading versus investing. My first question to you today is trading and investing one and the same? Are they different?
Definitely, they're completely different. I say they're like two sides of a coin. For me, investment creates long-term wealth. I have never seen in the list of top 10 world's richest people, India's top 10 richest people who have come from trading background. So all your long-term wealth creation happens only through long-term investing. But then if you ask me, how is it different from trading? Trading is short-term. Trading involves price movement and technical analysis is used to study the short-term price moves, whereas investment is long-term. And let me tell you, for short-term trading, even though for me the time period is very small, what you see is market sentiments when you do trading. But when it comes to long-term investment, what you see is, I see intrinsic value. I see how the company's performance is when I invest. Do remember always, stock prices are slaves of earnings. So if you don't have earnings in the stock where you are investing, then you will not make long-term wealth at all. Whatever happens in terms of inflation, interest rate, Donald Trump, all this is macroeconomic factors which are not in your control. Now, when it comes to specific industry or sector, then I will prefer, let us say, some of the sectors which are doing good, which has tailwinds right now and not headwinds. Those sectors I might pick, and I will pick some specific stocks in those sectors which can do very good. So investment is all to do about understanding the macroeconomic factor, industry or sector specific factor, and stock specific or company specific factor. But when it comes to trading, I do nothing except looking at momentum, looking at short-term price movement, looking at volume, looking at open interest, and I can talk hours together for you on investment and trading, but nothing better than Radhakishan Damani, owner of DMart, guru of Rakesh Jhunjhunwala, who is the Warren Buffett of India, now late Rakesh Jhunjhunwala. His guru Radhakishan Damani was asked the same question: can you differentiate between investment and trading? He told it just in 2 sentences. He said, 95% of my wealth, whatever I have made till today, I have made it through investment. Only 5% of my wealth I have done through trading. But he said, the capital required to make that 95% of wealth which came through investing came through trading. So trading gives you short-term profits, plow that back to long-term investing and create wealth. If my father says, I'll give you 100 crore Rudra, you put it into trading or will you put it into investment? 100%, not 99, 100%. I will put all the money only for investment. But if my father does not give me 100 crore, he did not give me even 10,000 rupee. When I started in 2002, 2003, I had a small saving of 10,000 with which I started. And I am the first generation when it comes to stock market in our family, in our community. And no one gives you money. No one gives you, in fact, even your daughter, if someone says I'm a trader. But then being a chartered accountant, I realized, yes, you should control your emotions in market well. You should understand the market information. Now through your expertise and experience, generate profits through trading, put that back to long-term investment and create wealth. So long-term wealth is only created through investing, but trading gives you that capital needed to make that long-term investment. See, for example, I want to invest in some stock and I want to buy huge quantity of it. But I may not have 50 crore, 100 crore, 200 crore to buy that one company which gives me long-term wealth. So I do trading, create profits out of it, and that I will again blow back to long-term investing. This is the success of making big money.
So, if I go by your words, investing creates wealth, trading creates an income. Is it a fair statement?
101% yes. Superb conclusion of the entire talk just in one sentence. You are very much right. Thank you.
Right. I often tell people, look, to succeed as a trader and to succeed as an investor, it's 2 different things. And to be successful as a trader, you should agree with the crowd. You should never go against the crowd. Don't bet against the crowd. To be successful as an investor, always bet against the crowd and you will win. Is it a fair statement?
Yeah, I will just change the sentence of that word crowd, but you are right. As an investor, you have to be contrarian. Now, what do you mean by contrarian? Now, when everyone wants to sell, they are desperate. You be a buyer. And when everyone wants to buy, you be a seller. You just go and then exit. This is beautifully summarized by Warren Buffett. He says, be greedy when others are fearful and be fearful when others are greedy. His guru Benjamin Graham, he made another beautiful statement. He said, buy from a pessimist and sell to an optimist. You should also know when to exit. Even if you take the latest market of Indian stock market and the way it did, what happened was October 3rd onwards, the fall started in Indian market, and in last 6 months from October 3rd to today, we have seen large cap stocks down 15%. At index level, Nifty Sensex are down 15%. But many large cap stocks like Tata Motors, Reliance Industry, these largest of the large cap, bluest of the blue chip, they are all down close to 40%, 30% from their peak. Mid and small caps are down 50-60%. And most of the successful top 10 India's investor, their portfolios were down 40, 50, 60%. Late Rakesh Jhunjhunwala's portfolio from the peak was down 57%. But then what is important is, these people learn from these mistakes. No doubt market is volatile, but not risky if you make the right bets. There is a difference between volatility and risk. And I always say, not taking calculated risk is the biggest risk of life. I have never seen, I will not see even in future, a highly successful person through markets who has made money without taking risk. So you have to take calculated risk and not foolish risk. You have to bet when odds are favoring you, but let us say the whole market may not agree with you. So yes, as an investor, you have to be contrarian. For example, I was very bullish on IT last year, but right now after Donald Trump and the whole tariff, whatever he is just laying left, right and center, who can predict Donald Trump? So I don't want to bet on IT as a sector. Market is a future looking animal. Don't see today's economics or today's fundamental and make your investment decisions. Many a times people ask me, Rudra, today economics are bad, but you say markets are very bullish right now. I feel the bottom is already done. I don't see market coming below 21,800 on Nifty. And for me, I am very clear, as an investor, you have to be a contrarian. But as a trader, it's not just following the crowd or the retail people. It is betting when odds are favoring you. And let me make this most important statement. As a trader, if you want to succeed, Jesse Livermore made this statement. He said, you are a successful trader if you know how to make money being right only 20% of the times. So people think if I am having 90% accuracy, then I can make money in market. Wrong. Now you might ask me how being 20% right, you can make money in market. For me, making money overall is important. No one can be right in every trade or an investment decision at all, but you can make money overall. I don't want to be right 10 out of 10 times, but I want to make money after making my total 10 trades. So out of your 10 trades, you might do 2 trades or 2 investment decisions also, which might be very successful. The other 3-4 might be average, the other 2 might fail. But overall, am I able to make money is very important. And the beautiful statement of late Rakesh Junjunwala, he says, wife and weather should never be predicted. You have to always follow it and blindly adjust with it. You should never fight with them. The secret for money as well as secret for great relationship was beautifully summarized by Rakesh.
People who want to succeed in the stock market should adjust with volatility. People equate volatility with risk. Risk is losing money permanently. It's impossible to lose money in the stock market. It's only the investors who create loss by becoming very emotional. Let's look at the case of a lady. People buy gold, but when gold prices fall, I am not come across one single lady who has complained that I bought gold and the prices have fallen. But people complain, I bought that and my advisor told I purchased this stock, purchased this mutual fund, and they complain that I lost money. It's only emotional things which make notional loss into permanent loss. So the first thing probably I feel is people should understand the difference between the real loss versus what you see as volatility. Many times it happens. So see, you live in Bangalore. So Bangalore buses will go full time. Sometimes you can take a bus to the reverse direction. Let's say you live in Malleshwaram. Take the bus in the reverse direction, go to 18th cross, the bus empties itself, take a seat and then come back. What stock market? You want to go towards the Majestic side, but that bus is crowded there. Take the reverse bus. That's a market correction. It gives you ample time. You get a time to seat it there. Then you can travel. That's the way people have to think about it. A question to ask you, you are a very successful trader. Can you give some 2 or 3 points which can make a person successful as a trader? To do things or what not to do as a trader?
Excellent. So there are only 3 things which can make you very successful in trading. And let me tell you, each trader might have his unique way or style of trading. Some might do it through F&O, some might do it through positional trade, some might do it through equities. So each trader might have a different style also. Some might do it using charts, some might do it using information. But I can only tell you one thing. Across the world, not just in India, across the world, whichever country you are from, if you want to be a successful trader, you should take care of 3 important things. Number 1, risk management. Number 2, risk management. Number 3, risk management. The only thing which is in your control when you invest or when you trade is controlling risk. So if you don't manage what is in your control and you try managing what is not in your control, then there is no question of you becoming successful in trading. So for me, what is this risk management? So I will only bet when odds are favoring me and not when odds are against me. Point number one. Point number two, don't put all your trading bet on a single trade and you're only on hope that if that goes, I will make money. If that breaks, I am out of the market. To win the game, you have to be in the game. So for example, in cricket parlance, I know that there is a very tough bowler today and I am a batsman like Virat Kohli or Sachin Tendulkar, and I know, for example, this bowler is very strong today. He is one of the top ace bowler of my opponent team. I want to just save my wicket and play single. I don't want to get out trying to hit a sixer. But if I wait on screens, I will get a part-time bowler, fourth bowler, fifth bowler, whom you can target hitting 30 runs, 35 runs, 36 runs also in an over. But do you have the patience to wait for him and not lose your wicket against a strong bowler? Understand the pitch condition, understand the market environment, and then take your trade. So patience is very important as a trader or as an investor. Market may not give you opportunity every day, every time also. But can you wait for that no ball, full toss, free hit? When you get a no ball, full toss, free hit, you cannot get out on that ball. And if you hit a single in that no ball, free hit sixer, you're not worth to be in stock market. In fact, I always say, not taking risk is the biggest risk of life. But you have to take calculated risk and not foolish risk. Now, what is this calculated risk, foolish risk? Betting when odds are in favor of you is a calculated risk. Taking care of your stop losses and getting out by making small loss as a trader is a calculated risk. But trying to go against the market, betting against the market, thinking that I am bigger than market. So if I say I am a chartered accountant, 5 master degree holder, I am a CFT level 1 from IFTA US, market says I don't care what you are. It treats me as equivalent to any other person. If you have anyone who is not humble in life, bring him to stock market. Markets will make him humble. So very important is this. I have learned from people like Rakesh Junjunwala, people like Radhakishan Damani, where I had opportunity to meet them one-on-one. Jim Rohn says this beautifully. He says, you are an average of 5 people with whom you spend most of your time. If you spend your time with people like Radhakishan Damani, Mukesh Ambani, Gautam Adani, Narayan Murthy, Rudramurthy, you will be average of these. But if you spend time with 5 idiots, you will be an average idiot. So in my life, I have learned this. Time is very precious. The only difference between a rich and a poor person, or even a rich and a super rich, is in his mindset and the way he uses effectively his 24 hours. You can't extend the 24 hours. It is only 24 hours a day. So you have to understand opportunity cost of capital. You have to understand that where we focus on expands. You can't do everything. So I want to just do what I am good at. I work on my strength. I don't work on my weakness. What I am good at, I do that. So to sum it up entirely, as a trader, if you want success, it is very important you take care of your risk. Your downside should first be protected. Buffett says this beautifully. He says there are only 2 rules in stock market, and he is the world's #1 in stock market. He says only 2 rules are there. If you want success in stock market, follow them. Rule 1, don't lose your hard-earned money. Rule 2, don't forget rule 1. So this is what Buffett told. To succeed in trading, you have to have a strong risk management. You have to control your emotions. You have to wait for the right opportunity and bet big. You have to load your truck when you get mouth-watering opportunity. What is the use of having a 80%, 70%, 40% kind of a return on a stock where you have only put 1% of your overall portfolio in that stock? So what matters is when you are right, you have to load the truck. That is where big money is made.
But one problem with the investors is if they hit success with the first trade or a second trade or a couple of trades, he becomes complacent and he thinks I know everything. And market has a uncanny knack to defeat anyone in their own games. Market is the super boss. It's the god, right? On the contrary, if somebody loses money, he tries to take a revenge. For example, somebody bought a Reliance share and the Reliance share fell and he got worried and he sells his position and incurs the loss. Then he has to recover the money only by buying the Reliance. He forgets that it was a bad trade, you start something different and you can still do. So it's a mental hurdle. What's your message for somebody who is taking a revenge on a trade and somebody who is complacent?
Excellent question. Let me answer all your questions in beautiful statement, making it short answer to big question. Success should never go to head. Failure should never go to heart. I always say, if success goes to your head, as you said, people become complacent. And failure should never go to your heart. That means you should have that attitude of never give up. Mistakes are done by everyone, even successful fellow. But that successful fellow will learn from his mistake and he will not repeat. The failure fellow will keep repeating the same mistake, expecting a different result to come or an outcome to be different, which cannot happen. Second, I was making this statement of Adani, who said there are many ways to make money, but there is only one way to retain the money made. That is, you have to stay humble. To make money, you have different ways, but to retain the money made, you have only one way. That is, you have to remain humble. And as you said, if you are not humble, market will make you humble. And most important for me, out of all this, whatever we have to understand is, never fight the market. The biggest message I can ever give to any trader is don't fight the market. Markets are always right. Markets are always supreme. Market is always God. Don't fight it. You might be wrong. And when you are wrong, take a small loss and get out. If you are not ready to take small loss, then you have to take mother of all losses. So it has to be important that as a trader, that's the reason why at the very beginning of our program I said investment and trading are like two sides of the same coin, but both need a different approach. I've seen few people who are good investors. I've seen very few people who are good traders. But you have even very few people who are good investors and traders because the psychology needed for this is different. Investment is a different ball game. Trading is a different ballgame. For example, even in cricket is same. But the way you play a T20 match, the way you play a 50-over match and the way you play a test match is different. You have some people who are extremely good only for a T20 match, but may not be good for a test match or a 50-over match. That's the reason why we have only one god in cricket. We don't have multiple gods in cricket. And that is only one name, Sachin Tendulkar. Why? Because over a large period of time, consistently in all formats, he has performed well. I always say words are cheap. Your performance has to speak. It has to speak by itself. So never do revenge trading. You have lost money somewhere. In fact, one person asked me a beautiful question. Good to discuss that in your show, NRI Money Clinic. So a person said, I lost my purse in MG Road. So should I search it in MG Road or should I search in some other road, he said. It was a beautiful question and he's asking me an example live and I have to give an answer. I said, you're right. If I lose a purse in MG Road, I will search it in MG Road. But if I have a purse which has more money in Brigade Road, I will go to that purse in Brigade Road and not waste time searching this small money which is left in MG Road purse. So for me, what is very important is don't fight the market. Don't fight and make your losses to get recovered from the same stock. I want to make money in market. I'm not here to satisfy my ego. I don't mind losing, but I mind losing only the game of market, but I want to make money. I know a lot of people who are right in analysis, but they don't make money. What is the use of being right in analysis and not making money?
Because analysis makes them paralytic.
Excellent, you are right. So I want people to understand, if you want to fight with someone, right, it is not the market. Mr. Market is always right. And as a trader, like we were talking as an investor, right, volatility will be there in market. You have to have the stomach to withstand that volatility. That is for an investor. But as a trader, I should understand that I am taking a short-term position with leverage and you have to manage leverage. Charlie Munger says this beautifully. He says, only three things can destroy a man. He says, number one, lady. Number two, liquor. Number three, leverage. He says only three else can destroy a man. And I say more than one and two, third one is very dangerous. But the big point is you should know when to leverage, how much to leverage, when not to leverage, when to reduce leverage, and even understanding asset allocation when it comes to investment. and understanding when not to bet big and when to bet big, and shifting money from trading to investment to create long-term wealth, all this put together makes a beautiful lunch or a dinner.
You spoke about God of cricket. I have a question to ask here. God of cricket Sachin Tendulkar takes the help of a coach. Vishwanath Anand, even while playing that World Cup matches, has a second who could be another grandmaster. These are the days of do-it-yourself investors. Everybody wants to do it things on their own. Is it time that the financial planners and advisors take the back seat and allow their DIY to continue? Or is there still a scope for these people, or is there a need? I will rather ask, is there a compulsory need to have a coach, mentor, a planner, a guide to guide them in trading or in investing?
I am of a very, very strong opinion that you should have the right coach, not just the coach, the right coach. If it is not required, then why a cricket team needs a coach? Why a prime minister like Modi needs a coach? Why a president like Donald Trump needs a coach? Coach is needed to see something in you which you are unable to see it yourself. So we need a coach. Now people sometimes ask me, why did not the Tendulkar's coach play better than Tendulkar? We are not here measuring is Tendulkar better or is coach better. If Tendulkar's coach can see in Tendulkar what Tendulkar is unable to see, then you definitely need a coach. But he should be the right coach. And for me, yes, in the times of do it yourself, it is like you telling me, Rudra, I want you to prepare vegetable palav and chicken biryani. I don't want to do it myself. I want to ask my mother to do a vegetable palav who has experience there. Life is too short to learn everything on your own experience. Someone has told this is a 440 volts, don't put your hand there. I don't want to put my hand, experience it, how I feel, and then I will listen to someone else. But you have to listen to the right people. But then it is very important, what value is your coach building and bringing on the table? If someone is charging you more than the value what he is bringing to you on the table, for me that coach is an expensive coach and that coach may not be required. The same we do even in stock market. We have good companies. But what I buy is good stocks. If a good company is not at good valuation and margin of safety is very less, then it is a good company but a bad stock. But there are bad companies which are good stocks where I have valuation comfort, but then I will not buy a good company and a bad stock. I will not even buy a bad company which is a good stock. I will buy a good company which is a good stock, which comes when market sees this type of crisis. You have to buy quality over quantity, but at right time, which comes during crisis, which gives even right price.
You mentioned about that 440 volts current. That takes my thought into something else. People often think, I will do mistake and learn. I always say, it's ordinary to learn from your own mistake. You don't have to reinvent the wheel all over again. You invent something new which is not known to the world. If somebody has already invented and if you know that there is a mistake, you learn from that person. And you go to a coach who has done enough mistake. I'll tell my own example. I am in the market from 1986. I burned my fingers very badly during Harshad Mehta period. And it was so bruising that I had to take loans and other things. I was about to become a Tenali Ram's cat, never to come back. Then I met somebody who is very knowledgeable who said, if you have lost money, you find that money in the place where you have lost it. If you start another activity now, again you may do mistake and you will become a rolling stone. You will not gather mass. So it's better if somebody is trained by somebody who is experienced, who has done mistake, who is humble enough to say what he knows, what he doesn't know. That's probably the best thing. The other thing is, many people think stock market is a dangerous place, 440 volts. Anything which is dangerous is useful. It's all about taming that wild energy, right? Stock market is wild energy. It's collective emotions of lakhs and millions of people. So one should learn the art of controlling the emotions and staying on the sides. So that is what is required. From the behavioral aspect, let's go to the market, what we are seeing today.
Just to also add another point which you mentioned, very important it was. So you take world's top 10 richest people. You start with Elon Musk, Go to even people like, let us say, next I have Amazons of the world. Look at Steve Jobs, look at Apple, look at Jeff Bezos. So when you do this analysis and try to see these top 10 world's richest people, including Bill Gates, Warren Buffett, all of these guys, why are they in that world top 10 in the richest people list? Is because they have made their investments in stock market. History says no other asset class in this world, including real estate, has given returns much better than stock market. But then again, history says no one else in this world has lost heavily by putting money into any other asset class than stock market. So that means, as you said, there is tremendous opportunity here. Many a times people ask me, Rudra, why don't you look at commodity market? Why don't you look at world market? I say I want to make money if that ample opportunity for me is available in India. And as you said, I have expertised all my life here. I want to make money here and I want to find opportunities here. No doubt I can say comparatively, as of today, China market is better than Indian market. But I don't understand China's fundamental as better as what I understand Indian fundamentals. I don't understand Chinese companies as well as what I understand Indian companies. So for me, relatively, yes, China might be better as of today. But then I want to be with my strength and not with my weakness. And to sum up, as you told very well, yes, you have to learn from your mistakes, be in that field, and how you have now come successful from where you were before. You will grow only when you have the right coach with you, and if that coach gives you the right value to what you are putting on the table.
Mr. Rudramurthy, that's a wonderful conversation I'm having with you, and you're so young, you're so experienced, and you're so eloquent, and you are full of those experiences which people can take comfort with. Now let's come back to a little bit of a practical world, the market today. We saw relentless markets coming down from all the way from 86,000 towards 73 or so. And in the last 3-4 days, at the time of recording of this video, we saw markets showing short covering bounce. What do you see in this market? Is it time for people to still wait to buy? Or is that the time they start nibbling, or they infuse big time lump sum at this point of time?
I'm making a very bold statement that this market has turned now from sell on rise to buy on dips. I'm very clear with the statements, whatever I'm making. I might be completely wrong, but I don't want to give two-sided opinion and be a great analyst. I can even tell if Donald Trump puts more tariff, then Indian market will fall. If he doesn't put, then Indian market will go up. This anyone can tell. So I want to share something which is not available in social media, whether it is in your YouTubes, in your Google, in your WhatsApps, what else? So I am very clear, this market has made a firm bottom. Market is always a future looking animal. So based on today's fundamental, don't look at today's stock market. It is the expectation of future is what today's stock market prices are reflecting. So I feel from next 1 to 2 quarter, corporate earnings will come back. Macroeconomic is coming back in a very big way. Look at GST collections in India, look at GDP growth quarter on quarter in India, look at tax collections in India, look at the corporate governance standards in India, look at also lot of things in terms of just not India macroeconomic story, but also look at sector and stock specific stories what we are seeing here. I said this is lifetime opportunity for someone to make big wealth. You should invest right now in market. And I just want to only tell one thing. With all my master degrees, chartered accountancy, 23-year market experience, all that, I had only one question which I wanted answer for. So I asked my boss in Mumbai, very close with people like Harshad Mehta, late Rakesh Junjunwala, Nimesh Shah, Radhakishan Damani. He is the guy who created some of these guys. I called him and said, boss, I know this is the best time to invest in market and we won't get this opportunity again. But the problem is no one has money. You don't have money, I don't have money, no one has money. We all know this is the best time. Where is the money? Because we are all fully invested. It is not like in September we sold all our stocks, we were sitting in cash, and now came March end and we know this is the best time and we are deploying money. I said there is no money. We all know this is the best time, but where is the money to invest? He just answered this in one line. He said, Rudra, there is no money anywhere. You have to create it. Now, don't ask me to explain this because your crowd is so matured, they should understand this one line. If I was in any other channel, so while introducing, you said CNBC, ET Now, Public TV, all these other channels, TV9, I have to explain people about this. My boss does not explain. He says, he makes me learn, but he gives those one-liners which will make me think about it and then come out with an answer. So what he is only talking about is, these are times when you have to create money. Means what? I have already seen gold going up 40% in last 2 years. Can I expect gold to go up another 40% from a higher base which it has made now? From here on, can it go another 40% in 2 years? Next to impossible. So these are times where I will make a different asset allocation, where I pull out money from something which has already done great and I'll put it right now in something which will become great in next 2 years.
Rotate.
Second, after asset allocation and mix, you have to also see which asset class, see, including for Elon Musk, including for Steve Jobs, including for Mukesh Ambani, money is always limited. Time is always limited, money is always limited, and they are scarce resources. You have to put them for optimum use by making the reallocation. So even Ambani has opportunity for 50 lakh crore, but he has only about 8 to 10 lakh crore. So he can't put money to all the 50 lakh crore of opportunity what he has. He has to judiciously put that scarce resource into that asset classes in that combination and asset mix with different weightages, which gives him the optimum return for a risk adjusted return. It is not return optimized with risk ignored. So these are times to create money and put it into market, and you won't get this wonderful opportunity once again in life. But yes, God is always there. I say, for you to make money in market, you need only 3 things. It is not or and. What are those 3 things you need? Number 1, you need information and you need right information. 2, you need experience and expertise to analyze that information. 3, you need God's grace. Whether you call it luck, whether you call it your fortune or your, I don't know what. But all 3 is needed. Someone asked me, Rudra, can you explain practically what is this luck in stock market? Nothing better than my own example I can give you. Last year, 2024, by April, May, I was just putting money into buying a own house. I was putting money into buying a lot of sites because I was not comfortable in market. Valuation was too expensive, but I was very early. By May, June only I decided, okay, market was not good. But when I removed money out of my large cap holdings and investment, which I held for 8 years, 10 years, I was selling them and buying real estate. Now what happened? Did I sell all my money? Not possible. We are all into market, so we can't make our portfolio zero. My size is not small to make the portfolio zero. But then what I did, 40-50% I liquidated and I was shifting that to real estate at that point of time. And now, after that, I felt I was wrong exiting by May, June. Market went on June, July, August, September. It was up, 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 up. Then came the month of October where the fall started. Now I feel it is the time for me to sell some of those real estate investments and put it back to market. Now if you ask me, was I so intelligent to exit before and do all this stuff? No, I was only lucky and God's grace was there on me. So that is what is making me to get out of all that at that point of time. I was lucky, and some portion, whatever was left out, I was still in market. Still 40-50% was in market. That has now come down by 30-40%. So your 50% which was still in market came down 30%. So your 50 rupee is now about, let us say, 35 rupee. But your other 50 rupee what you invested elsewhere has all grown up too much. Now it is the time to reallocate. So this is where you should have mehnat, hard work. You should have niyat, integrity, and you should have Bhagwan ka krupa, God's grace. With these 3, not or, but and, having all these 3 is important. Success is just a matter of time. And let me also tell you 3 more things at the very end. It is just not money which is important, but let this be told by someone who has made enough money. I don't want people without money to tell money is not important. But yes, money is not everything. Along with money, you need great health and you also need great relationship. So it is the balancing act of money, that is wealth, health, which is having that great capacity to enjoy that money what you have made or the wealth what you have created. And third, you should also have great relationship. So it is not health or wealth or relationship, it is health and wealth and relationship, and it is just a matter of time. Do reallocation even here. I was allocating all my time only on wealth creation. My health was bit down. Now I am again reallocating my time on my health and also reallocating my time on relationship. So you might be good in health or you might have allocated lesser time on wealth. Like how I am making reallocation, you should also make reallocation and then become a complete man who has great wealth, health and relationship, and not health or wealth or relationship.
I'll add one more to this.
Thank you.
We have done one video called The Meaning of Money on our channel, where I spoke about the four things. The three things what you spoke, we spoke. The fourth one is people should also have an inclination to spend money. You make money, and if you become so stingy that I will not spend money, you should ask, why are you earning that money? So finally, you are earning this money with an intention to spend. Spending could be on your car, your day-to-day living, could be charity, could be living a legacy, creating a trust, anything. But finally, people should also have a spending plan when you are accumulating. Do you agree with this?
100% I agree, and no one better than value money of Thyrocare.
Yes.
I met this gentleman. He always says, I'm not value money, I am value for money. His name is also rhyming with that word. He said, I asked him, give me one tip on entrepreneurship and on business where you can make big success in business. Success is just not money always. But then when I asked him, tell me one thing, value money, sir, he just answered it so beautifully. He said, Rudra, काम करने वाला बुड्ढा होता है, काम करने वाला बुड्ढा होता है, काम कराने वाला बड़ा होता है. So he said, those who do work, they will only get older by age. But those who get the work done, they will become big. So he said, you should learn how to get the work done so that you grow as a team and you scale your business, and you not only grow individually, but you make everyone around you grow. And this is the whole life rule. And also another important point, he always says, there is a difference between being a miser and being someone who sees value. So he is a person who sees always value in his spending. So as you said, if buying that Rolls Royce gives you that kick, you should own a Rolls Royce. And let's say for someone else, helping others and doing charity gives the kick, you should do that. Nothing right, nothing wrong. What gives you kick? To reinvent yourself and to keep yourself hungry. What gives you that kick? Do that.
Dear viewers, the guest speaker today, Chartered Accountant Mr. Rudramurthy, the author, the trainer, you would have enjoyed conversation with him. He too has a YouTube channel by name Rudralogy. If you are inspired by his talk, it's time you look into this YouTube channel of Mr. Rudramurthy and do subscribe and do watch his videos. He produces video on a regular basis. He guides people on the market movements, the trading positions and various other topics. Please do subscribe for his channel and be guided. Before I conclude, I would like to add a disclaimer here. This is a video for educational purpose, to understand the concept, to keep your emotions under check and to take decisions based on your risk profiling. Do not take any cues from this video to invest or not to invest, and before you commit your money, you need to consult with your financial planner and or the concerned professionals in this line and take those steps which are in line with your stated goals and in line with your risk profile. Dear Mr. Rudramurthy, thank you very much for this presentation, and I hope I get more chances to talk to you so that wisdom is transferred to the wider audience of NRI Money Clinic. We remain in gratitude to you for your kindness to share all these brilliant points for the benefit of my audience. Thank you very much, sir.
Thank you, sir.
Dear viewers, hope you enjoyed this lively conversation today. If it helped you to understand what you should do and what you should not do and the points to succeed in the stock market, do give me a thumbs up. If you are somebody who is yet to subscribe for the channel, please hit the subscribe button and press the bell icon. Do not forget to share these videos with your near and dear ones, friends and relatives, and on all the social media groups. Thank you very much for watching this episode on NRI Money Clinic. I shall be back with you with yet another expert, with yet another topic next Tuesday. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.